Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video we're going to be taking a look at the Forex market wrap, going to be highlighting the news that occurred this week as well as some of the charts that we looked at in the week ahead analysis. So let's kick off with the news then. What did we have this week? We had some really interesting data. Central news wise, we had the RBNZ hiking interest rates from 2.5% to 3%. Now, we did highlight in the week ahead analysis video that quite often when these moves are priced in, we could see the opposite of what you would typically expect to happen in the market. Especially if you're sort of on the retail side of things, you would have been expecting maybe price to jump off of this, but you know, the last time the RBNZ hiked interest rates, prices fell, and that occurred again this week. So yeah, that's what we kind of talked about in last week's video, and that's what we saw for the Kiwi weakened this week off the back of that data. We then had some pound CPI data showing that the inflation is increasing in the UK year on year, which is no surprise considering what the Federal Reserve have been talking about with their inflation, suggesting that their plans or their recent hikes haven't really had an effect on the inflation rate yet. So they're thinking about maybe even a bigger jump. So seeing CPI in the UK coming in a little bit hotter than expected isn't too much of a surprise to the market. And like I just said there about the Federal Reserve, we had the FOMC meeting minutes, and Jerome Powell talked about in that meeting minutes the fact that, you know, there has been a little effect on inflation at the moment, and you know, that has led to investors thinking maybe that we'll get a 75 basis points jump now in the next meeting. So it's going to be interesting. Is it going to be 50 basis points, 75 basis points? At the moment, it's looking more like it's more likely going to be 75. I think 50 is pretty much guaranteed, but is it going to be 75 in the next meeting? And yeah, so let's jump onto some charts that we looked at this week. We started off with Euro US dollar. We expected further downside in the market this week, and that is what we got. We had price breaking through the value area low, which is a good sign that you should be looking for continuations to the downside, and yeah, that's exactly what we had. Price then consolidated, pullback, came into these high volume nodes in here and continued to push to the downside. Yesterday we looked at a potential for a pullback continuation, didn't quite get that. Price continued to push to the downside. However, what I've actually got on here are just the US sessions. Okay, the US is obviously a very important session in the markets, and you can see here that today we really kind of built value at the US session value area low. Now, auction market theory would suggest that if price was building value at a value area low, price is more likely to break to the downside, and that's what we had here today. Price continued to break lower. A lot of people may have considered being a buyer here today to try and see that kind of daily pullback, especially it being a Friday, but that didn't happen. We built value, we broke out of value, we traded to the downside, and this is actually an untested value area high from a US session way back. So you can see price is finding a little bit of support there at the moment. Going on to dollar yen then, another chart that we like this week. We like this one for upside. We like the idea of potentially coming to see price test the before untested weekly value, weekly point of control, and the untested weekly value area high. We haven't quite got to the value area high, but there were some decent moves out of this market this week. First of all, we kind of stayed fairly above the value area low from last week, although we did pop down and revisit this high volume node, but we soon recovered that, traded back within value. What we were really looking at was, would price come and fill this gap initially, and then would it then trade to the upside? And that's what we had. Price filled the gap, pulled back, broke through, consolidated around the point of control. Again, you can see we've consolidated at a point of control at a previous weekly value area high, and look what happened to price. Price broke to the upside and we rallied through those key levels. You can see here on the 30-minute chart that we had just really nice rotations with price just breaking and clearing those highs through there. So yeah, good idea to look at dollar yen longs this week. Reason why we were looking a bit more on the yen downside as well was the strength meter was showing us that it was strong but in a reversal position, and against stronger currencies it could weaken, and that was one to watch against the dollar. On the flip side of that, we had Kiwi being weak. So RBNZ announced rate hikes, Kiwi weakened. We then pretty much just stayed within the value of last week. So we opened up here. We're actually expecting maybe a little bit of upside to this market, considering the yen performance, or even the Kiwi performance recently has been pretty good. But like we said, the risk to this was the RBNZ being priced in. We had to move all the way back down to the value area low of the week, and look how price reacted. We went all the way back to the value area high, we've rejected, and now we're on the way back to the value area low. So sometimes price will just re-enter value and just trade from one side to the other, especially when you've got two currencies that are, you know, performing the same. Essentially, you've got a Kiwi that's weaker because of recent data, and then you've got yen as well. Two weakening markets can cause a range, and just so happens that it filled the weekly volume profile of last week and just continued to range within that. So this is a really good, I wanted to feature this again, even though we didn't quite see the analysis that we expected, but you know, look how volume levels helped find support and resistance in those type of scenarios. So definitely something to consider in your own trading. Finally then, gold. Expected gold to actually push a little bit higher initially. We were looking for shorts, but we didn't have any evidence that price was going to roll over. Monday came and price of gold just absolutely sank. We broke through multiple lows. That was just clear evidence that, you know, we weren't going to revisit the 1806s before seeing the downside. The dollar got a little bit stronger and pushed prices lower. And what was quite interesting this week, we had sort of a break back within this previous week's value area. We held below the value area high, rejected it, moved all the way back down to the value area low, and then we broke the value area low, and prices now come and tested an untested weekly value area high. So always kind of bouncing between these volume profile levels, and you can see prices starting to reject that level at the moment. So you can see again how strong these levels can be. What was interesting this week, when I was looking at the US session profiles, you can see price came up to the high value area high. We dropped quite significantly. The next day, price did exactly the same thing, came to the value area high and dropped to the downside. So it was quite interesting to see that this week. We had you could have had like two separate opportunities on gold shorts if you were using the volume profiles that way. So I hope you enjoyed the videos this week. If you did, leave this video a thumbs up, subscribe to the YouTube channel to see some Forex trading content, and I'll speak to you in the next video.